And thank you so much. Well, thinking about saving money by dropping your long-term care? Well, Stewart Welch joins us to explain why you might not want to do that. Good morning, sir.
Good morning, Sarah.
All right, first of all, you say don't do it, but I want you to also explain what it is for folks who don't know.
So long-term care is a form of disability income insurance for people, generally for seniors, and it's if you can't perform 2 of 6 daily habits of living, then you actually qualify for insurance, and the insurance company will come in and pay for reimbursement of medical care. And so, you know, you got 80 million baby boomers headed to the retirement exits, and you have escalating medical costs, and so you've got kind of a natural disaster that's forming.
Under what circumstances would it be okay to drop the long-term care? You're saying don't do that because, you know, people may be feeling like, oh, I'm pretty healthy now, things are going well now, but down the line.
The first decision is whether to buy it or not buy it. So if your decision is, I'm going to self-insure, or I'm going to offload some of that risk to the insurance company in the form of buying this type of insurance policy. And we had a case, Sarah, that it was 2 couples, they were elderly, 2 couples, but both had to have 24-hour care.
Wow.
And it cost $200,000 a year. So if you can imagine how that might impact your finances, a lot of people are going to decide to buy the insurance.
Okay, so what are our choices now out there?
Well, I think here's the big problem. What's happening, and this is what people don't know, is that in long-term care business, they've had now decades of experience with claims.
Sure.
And what they're finding is because of rising healthcare costs and people living longer, these insurance companies are losing mega amounts of money, and they're all bailing out of the business. And so if you have a policy, even though they may be raising rates on it, you're want to think really carefully before you cancel that policy. And so, you know, it's going to be a really, really big problem that people are going to need to face.
So what should you look for in that policy? I imagine that not all policies are equal.
There are so many different options. I think the main thing most people look for is coverage that's going to allow them to stay at home.
In their homes.
And essentially what you're buying is a daily benefit for a certain number of days, usually 3 or 4 or 5 years. And it feels expensive, and people are frustrated because the insurance companies are coming up and raising the rates. But the state insurance commissioners are, in my opinion, not allowing them to raise the rates fast enough to cover the liability. So again, you're seeing major companies like Prudential, MetLife, John Hancock either getting out of the business or severely curtailing their policies. So if you have one, you want to think long and hard before you get rid of it, and now might be a good time to be thinking about going ahead and getting it before there's nobody left in this business.
All right, Stewart Welch, for more information, of course, you can always check with him to get more information on the fine print and all that kind of stuff. So Stewart, thank you for joining us. That is a good thing to keep in mind.